This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Hong Kong. The top stories this hour. Asian stocks are set to catch a tailwind from Wall Street as traders gear up for a flood of earnings reports, the US election and key economic data. The US finalizes restrictions on China's semiconductor investments. Investors also awaiting an AI chip earnings update from AMD. And HSBC to report third quarter results today with a focus on the new CEO's restructuring plans and a fresh share buyback.
This is a setup across Asia. Right now, we're watching the Japanese yen holding steady at that 153 level. This is after 4 weeks of losses against the U.S. dollar already. It's given up all of its gains since the Bank of Japan hiked rates back in July. We do have another rate decision coming up on Thursday. As we're watching jobs data as well, of course, we've been watching political instability here in Japan. The Prime Minister promising stability to come with more economic measures as well after the ruling coalition lost its majority in Parliament. We continue to watch really currencies across the board because this pressure that we're seeing across Asian currencies, we're seeing the Bloomberg gauge now at the lowest level since August. Same thing for the Aussie dollar, which has been pressured. Right now, we're seeing the staggered open for the equity markets. Right now, not doing a lot at the moment, but Nikkei futures now pointing to a little bit of downside. We might get some tailwinds coming from the Wall Street session, though. Take a look at how U.S. futures are coming online. We had U.S. stocks gaining ground overnight. Those Trump trades, especially around crypto, Trump media gaining ground after that high-profile event by Donald Trump over the weekend. We're also in the busiest week for this earnings season. More than 40% of companies on the S&P 500 reporting this week. Our next guest is expecting earnings growth to spread out beyond tech. Let's bring in Andrew McAuley, Managing Director at UBS Global Wealth Management. Andrew, great to have you with us. So far, we've seen those reports coming in from the U.S. It's been a little bit more disappointing than expected. What are your expectations going forward?
Yeah, well, we're quite bullish on earnings. We think that overall earnings growth year on year, stocks should deliver, or the S&P 500 should deliver around 13% EPS growth. That will be led again by tech. We see tech delivering earnings growth of around 17.5%. And we expect a spreading out of earnings. We think that we should see industrials, consumer, some of the other sectors delivering growth, improving growth, and probably somewhere around the 11% area.
Andrew, we do have also the jobs data coming out on Friday. How will this set up the Fed?
Yeah, it's interesting. Jobs growth has probably been surprising to the upside. We're seeing an average, the non-farm payrolls have been delivering an average per month of around 185,000. The Fed are talking dovishly. We don't see any major surprise. If it does surprise to the upside, we don't think it'll change the trajectory of the Fed. We're expecting another 50 basis points rate cut this year and 25 basis points each quarter next year. And if you had to, narrow it down to one particular reason, it's the obvious one, and that's inflation is trending down nicely. And, we'll get some inflation data later on this week. But we think, underlying inflation, PCE, the Fed's preferred measure, the last data point was 2.2% year on year. They're targeting 2%. We're almost there. And we think the numbers will get pretty close to that 2%.
When it comes to AI, you say that you've perhaps become a little bit more bullish. Do you expect that we're getting a little bit more solid definition, I guess, around the edges of how this is going to be monetized and when those returns will materialize?
Yeah, it's top of mind for our clients. This AI thing. How much is it worth? What's it mean for my portfolio? Our view is, we're still in the early days of determining what AI will be worth. It comes down to how much or to what degree will AI improve work productivity. We think that the value add from AI will be probably something similar to the internet, We think that the internet, the delivery of the internet, increased productivity, something like 26%. And we think that AI will do something similar, probably about 30%. We're getting to the point now, it does have to deliver. We need to develop, or the world needs to develop applications to do something useful with it. And the best way to add value is improving worker productivity.
I do have to get your views when it comes to political risk, right? We're edging ever closer to the big vote in the US. How does that potentially impact how much risk you're seeing at the moment, either as a proxy through Australia and China or directly when it comes to the US?
Yeah, you won't be surprised we're sitting on the fence. The polls, we can all read the polls, and we're sort of 50-50 more or less. The betting markets are more bullish on Mr. Trump. But looking at the two candidates and their different policies, Trump's, former President Trump, the policies of raising tariffs, the policy of either keeping taxation rates where they are or reducing, is probably inflationary. So, Mr. Trump was talking about a 60% additional tariff on anything coming from China and 20% on goods coming from elsewhere in the world. In terms of what that means for China, China is already in a difficult spot. They're doing their best to stimulate the economy and generate, consumer expenditure there. And so it comes at a difficult time for China. As what it means for Australia, Australia isn't, we're not as leveraged to the Chinese economy as we were, say, 10 years ago. We're still well and truly leveraged. So 8% of our GDP is exports to China. But we think, look, it's difficult. We need to wait and see what the policies are. That's our advice to our clients. That make changes to your policies to your portfolio based on what you think might happen. We really need to see who's running Congress. Will the victor have control of both houses? We don't think so either way, and so it makes it difficult to get policy through. But undoubtedly, even if Mr. Trump comes in and he adds the 60% tariff, China has other things they can do. They're a large economy, and the central government is in very good financial shape. So they'll do other things to compensate.
Andrew, really great to have you with us. Andrew McAuley, who's a Managing Director at UBS Global Wealth Management. Coming up on the Asia Trade, the CEO of India's largest airline, IndiGo, joins us for an exclusive conversation after the company posted its first loss in 2 years. We'll be talking bond strategy with Standard Chartered, plus taking a look at what Australians want to see out of the US election with the Lowy Institute. This is Bloomberg. The Biden administration has finalized restrictions on investments by US individuals and companies into advanced technology into China, including chips and AI. For more, let's bring our tech reporter, Admiral Driller. So, Val, what do we know about this?
Well, we had an executive order that was signed in August of last year. So this is about what's called the final rule that's being put in place now. So it essentially gives more context and also just spells out the restrictions in more detail. So we sort of had a blueprint that was put out in June of this year. But what we know is that there are 3 sectors that are being covered here. So you have semiconductors and microelectronics, quantum technology, and then also AI. And so what happens now is that US citizens, or what are called US people in the White House statement, are essentially banned from some investments in these industries, or otherwise they're also required to notify the US governments. There's sort of 2 things at play here, either a ban or some sort of notification going into effect. It's an extension really of the restrictions that were already put in place to limit exports. Now we're really talking about the investment piece instead.
So when do these investment restrictions then take effect?
So they take effect in January of next year, January 2. As I said, the framework largely resembles what was already put in place or floated in June of this year, but it does give greater clarity. So to give an example of one of these, it would be semiconductors. And what we heard from one of the senior White House members or administration people was that if you're talking about advanced chips, for instance, advanced semiconductors, then a ban will be put in place on a US person investing in an advanced semiconductor company in a place like China, for instance. If you're talking about legacy chips, this is more older technology, then a US person would need to notify the US government instead. So as I said, there's already those export restrictions on advanced chips to China. Now we're looking at investment rules instead that are designed to complement those existing rules. If you're talking about AI, for instance, then it's looking at both the computing power that's used to train the AI tool and then also about how the AI tool is going to be applied. So really the concern here is that the US doesn't want to be in a position where it's preventing or allowing, rather, countries of concern. This is what they deem to be places like China, for instance, quite explicitly in the statement, but they don't want to be in a position where they're essentially allowing China to use US technology against it.
Our tech reporter Anna Boudreau, as they were staying with China, and investors yanked money out of exchange-traded funds that buy Chinese stocks last week, halting a streak of inflows as the latest stimulus measures failed to impress investors. Our China correspondent Min Min Lo joins us now. And is this sort of an indication of a lack of longer-term conviction?
Yeah, it could be, because so far, investors have really been quite disappointed by the fiscal push so far, which we've seen as missing the mark when it comes to the lack of consumption-targeted measures. So we saw quite a stunning reversal when you look at those flows into these US-listed emerging market ETFs, as well as some of the ETFs targeting specific countries. Last week saw outflows of more than $590 million. That's compared with the previous week, which saw gains of more than $460 million. So if you look at the screen, that's showing this iShares China large cap. Last week seeing the largest weekly withdrawal since May of 2020. So again, that momentum from September starting to fizzle out. But of course, we know the Vice Finance Minister Liao Min had told Bloomberg that the upcoming fiscal push is going to be quite large. So all eyes will be on that legislature meeting on November 4th to 8th, where we could get more details of the fiscal push.
No doubt all eyes in Beijing is really on the outcome of the US election, how sort of China's position in the world and posturing, what that looks like, right, after the vote. What are we hearing in terms of what Xi Jinping's priorities are?
Yeah, so this is according to Chinese state media. He held a study session with the 24-member Politburo, and he had called on officials to bolster China's image and its soft power. And this really has been a hallmark of President Xi's leadership, right? He's been trying to increase China's influence on the world stage, especially in its appeal to the global south. And that's why this year China had held what it bills as its largest diplomatic event, which was the China-Africa Cooperation Summit, trying to, offer financial support of $50 billion to the continent. President Xi, who very rarely travels, went to Russia to attend the BRICS summit, meeting with, the Indian Prime Minister, the Russian President. And so this perhaps is, China's way to ensure that it stays resilient. Hopefully the soft power pays dividend, especially in this more hostile international environment where we're seeing a lot of tariffs, a lot of trade barriers enacted against China.
Bloomberg's China correspondent Min Min Lo there. And here are the latest geopolitical news that we're tracking. Israel is readying a new laser defense system that can intercept rockets, drones, and mortars. The shield, known as Iron Beam, is expected to be operational next year. The announcement comes as Iran says it will respond to the weekend's Israeli strikes on its missile systems. For security reasons, the Israeli cabinet has moved its regular meeting to an undisclosed location. Israel's parliament has passed a bill to restrict the main UN organization supporting Palestinians. The bill bans the UN relief and works agencies' activities within Israel's territories. While this technically doesn't include Gaza and the West Bank, the agency would be impacted in its daily operations, and the move further threatens the already slow flow of humanitarian aid to Gaza. We have more ahead on the Asia trade. This is Bloomberg. Boeing is launching a nearly $19 billion share sale to address liquidity needs and stave off a potential credit rating downgrade to junk. Let's get more from our senior aerospace reporter, Julie Johnson. And Julie, this is one of the largest share sales ever by a public company. How urgently does Boeing need these funds?
Oh, absolutely. This is crucial for Boeing. This is an investment in the company's turnaround in its future. Boeing needs this money to get through the next 2 years to the point where its factories, it gets through the strike that's playing out right now, and its factories get back on better footing.
How likely is this going to be able to fix their problems? Is this just a stopgap measure?
No, really, Boeing's sitting on $500 billion worth of orders. So it's really just a matter of executing and operating. And this has been a real problem for the company for 5 years. They've got a new CEO who's come in with a plan. But the strike has really dealt, which is now in its 7th week, has really dealt the company a big blow. And it now projects it's going to lose money next year as well. It's got some big debt repayments coming. So this is money that gets Boeing, hopefully, bridges the gap to the point where the company's turning around. And one thing, we're waiting to hear the final pricing from the deal. But the early signs were that investors were very eager to get on board with Boeing. And I think they've bought into this narrative as well.
So when it comes to the strikes, we know the factory workers rejected the latest offer. So where are we on those labor negotiations?
Oh, it's a great question. We're waiting to hear when the two sides get back to the table. The labor union last night, U.S. time, put out a plea to the Labor Department to get involved. And the last time the Secretary of Labor flew out to Seattle, she got both sides to the table, and they got an agreement that the workers voted down. But they need more of that talking, and it doesn't seem to be happening right now.
I wanted to ask you about the space business, right? How much of this is sort of a pretty straightforward win if they're able to kind of cleave this off, and does that remove some of the drag from the business?
Oh, absolutely. It would be huge. And I think, we get back to the why are people eager to invest in Boeing right now when it's a basket case, and why are they going to market right now without the strike? But I think removing the strike is another step on that path towards the company maybe, hopefully, turning things around. And there's some optimism that with good management they'll move in that direction.
Our senior aerospace reporter there, Julie Johnson, with the latest on Boeing. And GE Aerospace CEO Larry Culp says 2026 remains a target date for Boeing to deliver its next flagship aircraft powered by GE engines. He spoke exclusively to Bloomberg's Insight with Haslinda Amin.
We'll let Kelly Ortberg and the team at Boeing talk about the schedule for the 777X. I think their last comments talked about an entry into service in 2026. We're thrilled to be the only engine under wing with our new 9X engine. When I talk to customers, they tell me two things. They love that airplane, and they wish they had it yesterday. I think the fact that customers are very keen to see Boeing work through the development and the certification tasks that lie ahead of them is really good news for Boeing. It's good news for us because that's going to be a heck of an airplane once it enters into service.
Airlines like Cathay have expressed a disappointment. I mean, is there a sense, are you confident 2026 is actually viable? That's the plan that we're working on with Boeing. We know that's the plan that they're working on with every ounce of energy and dedication that they can provide. You talked about your 9X engine. It's been problematic as well. There are a few challenges there. There have been cracks. Can you talk us through what is happening, what the root cause is, and how are you trying to fix it? I think you may be referring to a piece of equipment that is attached to the 9X engine, which is a Boeing supplied part, not a GE Aerospace supplied part. So the engine has performed very well over the last several years. It was certified back in 2020.
there's plenty of work that we still need to do to be able to ramp side by side with Boeing. But in terms of the core integrity of the engine, we're in very good shape.
So you're saying that it is not on GE to fix a problem, it is on Boeing to fix that problem?
I think the crack that you're referring to is a function of a Boeing supplied component, not a GE engine.
When do you see testing resuming for the 777X? Is there a sense that you're getting in your conversations with Boeing?
That's really for Boeing to speak to publicly in terms of the schedule for that, the resumption of that testing.
GE Aerospace CEO Larry Culp speaking to us for Insight with Haslinda Amin. And join Haslinda for that interview in full at 11 a.m. Singapore time today, 11 p.m. in New York. And here are some of the other stories from the corporate front. Volkswagen plans to close at least 3 factories, slash thousands of jobs, and cut wages in Germany to turn around its struggling brand. The unprecedented plans were revealed by the head of VW's Works Council during a rally of some 25,000 workers at the company's headquarters. VW is expected to report declining third-quarter profit and sales on Wednesday. Ford shares tumbled after the bell on a warning that full-year earnings will fall to about $10 billion, the low end of its forecast. The car maker is struggling to cut costs and overcome supply disruptions caused in part by recent hurricanes. Ford CEO Jim Farley says the EV unit is the main drag on the whole company. Starbucks is telling its corporate staff they could be fired if they don't work in the office 3 days a week. A memo seen by Bloomberg shows the coffee chain is implementing a standardized process from January to hold workers accountable. The move comes less than 2 months after Brian Niccol took over as CEO. Apple has started rolling out its first set of Apple Intelligence features along with a new iMac desktop with an AI-focused processor. The AI software is now available for the iPhone, iPad, and Mac. Although Apple previewed a broader set of capabilities in June, some of the most anticipated features, including the ChatGPT integration, are not arriving until December, Haidi.
Take a look, Shery, as to what we're watching as we get into the start of the trading day. We're seeing futures looking pretty unchanged at the moment, and this as we continue to look ahead to what is a big week, both in terms of that build-up of election risk, political risk, but also a lot of key eco data before we get to that Fed decision as well, including that PC inflation reading, as well as the key jobs numbers that could be quite skewed when it comes to some of the sort of weather-related and Boeing-related elements that we're watching. NASDAQ 100 futures, a little bit to the positive side and not much movement when it comes to Dow futures. This is Bloomberg.
We have breaking news out of Japan. We are getting the jobless rate here coming in at 2.4% for the month of September, coming down slightly from 2.5% in the previous month. Is also coming in below economists' expectations. When it comes to the job to applicant ratio, coming in at 1.24, and this is a slight increase, 124 jobs available for 100 job seekers, so a little bit higher than the previous month. And all of this coming at a time when, of course, the Japanese job market remains pretty tight, supporting wage growth. We are getting the BOJ rate decision on Thursday. Of course, we continue to watch the markets as well, as we have also heard from the Japanese Prime Minister Shigeru Ishiba promising to restore political stability after his ruling coalition failed to win a majority in the lower house. Our economy and government reporter Alistair Gale and Japan stocks reporter Alice French are here with us to dissect everything that's going on here in Japan. And Alistair, let me start with you, because we heard from Prime Minister Ishiba yesterday. It looks like he's not stepping down, but we still have a vote, and it doesn't necessarily mean that he could stay on as Prime Minister for a long time.
That's right. His future is very uncertain at this point. He looked thoroughly depressed yesterday in his press conference. Obviously, the LDP took a beating in the election and he's lost his majority, which means now he has to either find an opposition party that he can work with or do individual deals on policies to sustain his government and to stay in power. So, we really don't know what this is going to look like going forward. It's going to be very difficult for him to pursue some of his pet policies such as raising taxes to pay for defence spending, and he's really going to have to take heed to some of the opposition demands on things like tax cuts, for example. So he's now lost a lot of power, he has to compromise, and his future is very uncertain.
Historically, you would think political instability means pressure for the markets, but Alice, it was really interesting that we actually saw stocks reverse those earlier opening losses to actually gain ground.
Yeah, I mean, we saw the Topix end actually 1.5% up yesterday, which I think was a surprise for quite a lot of people, particularly as we saw several days of declines last week. Many people are saying that this was just that the market had been discounting on this expectation that the LDP would have this loss. And so yesterday was sort of just a reactionary rise after that. But of course, we did see the yen also fall quite a bit yesterday, which often does lead to a rise in the stock market. I will say it wasn't all good news across the market. Some of the sectors that had been seeing a boost from Ishiba's policies, like, for example, defence, as you mentioned, Alistair, were down yesterday. And there's also some concerns surrounding regional stocks, things like regional banks. Ishiba's being quite big on regional revitalisation. So those sort of stocks are still sort of looking uncertain. But yes, we did see a rise yesterday. Many people I spoke to yesterday saying it was more about the yen than the domestic politics.
Does all of this have implications as we head into the BOJ decision?
Yeah, so we've got this BOJ policy meeting on Thursday. Of course, it comes at a very interesting time as we're in this sort of interim period where we don't know who's actually going to be running the government. Many people that I spoke to yesterday were saying that it's very unlikely that we will see the BOJ decide on any other rate hikes this week just because of the instability, which obviously is going to put further downward pressure on the yen. Which may be a good thing for stocks. But interestingly, as we saw last week as well, it does seem like amidst this political instability, the impact of the yen on stocks is sort of smaller than usual. We saw a few days of yen falls last week too, but the market was still down. So there are sort of lots of different factors at the moment that are competing for importance in investors' minds. So it'll be interesting to see how that BOJ decision plays out and how it impacts the market.
Alistair, I mean, we talk about the BOJ being an independent body, but at the same time, the political influence and pressure cannot be discounted, right?
Right. So, with the instability in the government, you may see people inside the LDP or even, in some of the other parties who might want to work with the LDP. Some of these people have strong views on the BOJ. We obviously know inside the LDP there's Sanai Takaichi, who is very strong about pushing back on BOJ rate hikes, but some of the parties that Ishiba may look to do deals also have strong views on the BOJ, such as Ishin, which actually wants its policy manifesto included a demand for the government to be able to fire BOJ officials. So there are lots of different views now which are in the mix, and as Ishiba tries to sort out how he's going to run the government, he may have to take some of these into account, which means that the BOJ has to keep one eye on politics right now.
And Alice, as we continue to see the political instability, what are investors saying right now about the optimism that we've seen about the financial markets here in Japan, especially when it comes to corporate reforms and governance?
Yeah, so I was hearing mixed voices yesterday. Some people saying that actually this sort of political paralysis could be a good thing because those sort of reforms that are in place will kind of just be given their time to sort of do their thing, and there won't be any new sudden policy decisions for the foreseeable, which could actually be a good thing for investors. There are also some concerns that those sort of reforms that we've seen, which are quite strongly associated with Abe and Abenomics, could potentially sort of get weaker as the opposition parties start to have more and more influence over the LDP. We don't know whether things like, for example, big government spending, which again was characteristic of Abenomics, we don't know whether that is something that will divide or sort of be a source of agreement amongst these parties. So there's definitely a lot of uncertainty. I was speaking to someone yesterday who said that, the only thing we can be certain of at this stage is uncertainty. So investors are definitely sort of in a wait-and-see period, I think, regards government policy.
Alistair, there's certainly a lot of wait-and-see, particularly as we get into potentially a period of political uncertainty for the US as well, obviously a key ally with Japan. Do we know much about, whether this has an impact on foreign policy or the posturing, I guess, going into, however Japan works with the next administration?
Right, so obviously we have the US election around the corner and a new president coming in. This is a very important relationship for Japan, of course. The US is essentially the security guarantor for Japan. And, you have to think that right now the priorities for Ishiba, other people in the government, are the domestic matters. He has to figure out how he's going to have a stable government. He has to think about how to get the budget through and perhaps make compromises with some of the partners in opposition parties that might support him, which just means that there may not be a whole lot of bandwidth to deal with foreign policy issues. And of course, if we have a President Trump coming back in, we know that he has strong views on Japan. We know that he would like Japan to, for example, pay more for the US security presence here, for the troops here. So how much does the government and how much does Ishiba, if he's still the Prime Minister when the US election takes place, how much is he able to deal with that, and what kind of relationship would he or the next Prime Minister, whoever that may be, have with the US President? You have to think that that's sort of moved down the priority list right now, which is a problem because this is, as I say, a very important relationship for Japan to make sure remains stable.
Alistair Gale, Alice French, good to have you both with us today. Of course, Heidi, really dissecting what's happening in the Japanese political and economic environment, as well as we continue to watch the yen, of course.
Shery, it feels like almost unprecedented level of sort of political confusion at the moment, uncertainty as we head into the US election, of course. But take a look at our markets are kind of setting up for this pretty muted reaction as we head into the open of other major markets. Australia trading now for, just about 40 minutes or so. We're seeing kind of, pretty subtle gains, about 0.4%. We did see some pretty steep losses when it comes to energy in the previous session, given the uncertainty over oil, particularly that demand side situation, as that focus again goes back to China and goes back to some of the weakness that we see, the cracks in the global economy. Singapore Nikkei futures looking like this, not much of a change. We did see sort of perhaps a surprising sort of gains when it comes to Japanese stocks, we were just talking about it a little bit earlier, but that sustained weakness and the yen may be playing into that as we head into, of course, a Bank of Japan decision in the coming days as well. A little bit of risk aversion could be seen. S&P futures also looking pretty muted and unsurprising given just the slew of eco data, the Fed uncertainty. We also saw that move in bond yields again, as both in terms of the anxiety over a couple of auctions that didn't go particularly strongly, more supply in the pipeline, as well as that uncertainty over the Fed, all playing into what we're seeing, that continued revival in the move in bond yields. Well, coming up next, the CEO of India's largest airline, that's IndiGo, joins us exclusively. The carrier posting its first loss in 2 years. More ahead on the Asia Trade. This is Bloomberg.
Shares of Interglobe Aviation, which operates India's largest airline, IndiGo, fell in Mumbai after the airline reported an unexpected loss of around $118 million in the second quarter. Several analysts cut earnings estimates for India's largest airline after the first loss in 2 years amid higher fuel bills and also a jump in maintenance costs. IndiGo CEO Peter Elbers joins us now for an exclusive interview here in Tokyo. Thank you so much for coming into the studio.
Hi, good morning. Thanks for having me.
Tell us a little bit about what happened in the last quarter.
Well, we see probably a combination of a couple of factors. I think what was the most important driver here is that our number of groundings of aircraft as a consequence of the global supply chain challenges have really peaked in that quarter. But the good news here really is we've turned the corner and we see these numbers going down. So we had some extra maintenance cost, we had some higher fuel cost. So our top line still grew 15%, 1.5. So that's actually a good trend. But these additional costs due to the groundings and the fuel price has really pushed this traditionally weaker second quarter into the red.
So you're not necessarily reappraising growth forecast for next year?
No, I mean, we have a capacity guidance which we've given for this year in the early double-digit numbers. We actually maintain that capacity guidance. The third quarter has started. Meanwhile, we see actually very positive momentum again here, and the peak season in India is really this time of the year, and with Diwali coming up, and we see that really playing out very positive.
There was a little bit of concern about actual demand in India. What are you seeing?
Well, India has grown enormously over the past 2 years, and whenever we have exited COVID, we've seen the numbers really going up. And we would see whatever happened in the second quarter a bit as a normalization of some of that growth trends. You cannot grow every quarter 20% and 20% and 20%. Again, looking at our top line, we had 15% of growth in that second quarter. We recorded 8% more 6% more passengers and 8% more ASKs. So we see that healthy growth pattern going on even in this weak quarter. We saw that.
I wanted to ask about China because that remains sort of a gap, of course, when it comes to, there's no sort of non-stop flights at the moment flying between India and China. We have seen that warming of relations recently between the two leaders. Do you expect that this could mean a boost when it comes to that connectivity?
You're absolutely right. There's no actual flights other than the flights we have to Hong Kong. But we have expanded a lot of international new destinations and new flights. So I think outside China, there's still a lot of opportunities for us to grow international. We've grown actually a lot of new destinations over the past few years, even more routes we have added. We've added recently Jaffna, we'll soon open up Mauritius, and we've announced new flights into Langkawi and Penang.
I wanted to talk to you about the supply chain issues, which, of course, you mentioned at the top of this conversation. It must be frustrating, right, when you take a look at, the inefficiency of grounded aircraft, when you take a look at the various supply and production woes that the broader supply chain seems to be struggling with at the moment. What's behind this, and what's it going to take to kind of move beyond this? Is it a bit of an existential crisis for the industry?
Well, I wouldn't call it an existential crisis, but frustrating, I guess, is a mild way to put it. I think at IndiGo, what we have done really well is we've taken a whole host of mitigating measures. Of course, they come at a cost, but with these mitigating measures, we've been able really to deal with this supply chain shortages and challenges and the powder metal issue at the Pratt engines we're having. But having a number which was as high as in the mid-70s of grounded aircraft, that's a very steep number for any airline to deal with. Despite that, again, we've been able to maintain our capacity guidance, keep our market share, and further expand our network. So we've turned the corner now, and we see these numbers going down, and exiting the quarter, we were still in the high 60s, and by the end of this financial year, in March of 25, we expect that number to be sub 50. So we see an improving trend in this factor. In addition to that, the fact that at IndiGo we get a new plane coming in every week is really helping us to deal with these challenges.
Have you seen the impact of these supply delays from GE?
I mean, our planes are coming in on time, so we haven't seen any of that on the GE side.
Do you plan to start leasing wide-body planes? I know you're expanding internationally, so how are you going to cope with that?
You know, what we have today is we have actually our planes which we have today, the Aerospace, are ready to reach probably the range of 60 to 65% of the world's population. So the geographical position of India really helps us on building that. We have ordered the Airbus XLR. The XLR will come in next year. That will bring us further into Asia, bring us further into Europe. And by 27, we get the Airbus 350s being delivered, and that clearly will give us a global reach and a global position. Whatever we do in between today and 27, that's part of some internal evaluations to be done.
Which could include more leasing.
Which could include more leasing. We're not ruling out any of that.
So you're also starting business class services?
Actually, in 2 weeks from now. We're very excited about it.
What is this business model change that not only yourself, but globally low-cost carriers are going through? Does that mean that you could even be potentially part of bigger alliances worldwide?
Well, not per se alliances, but we do have a lot of collaborations. And actually, we work today with 9 to 10 international airlines flying into India, connecting on us. And the business class, really, I would say, is a reflection of the changing India. So India is probably has the largest penetration of low cost, and we continue to keep our cost leadership. But beside that, on the nation's busiest and business routes, we fly 20 a day between Delhi and Mumbai. That's a big market. And in that big market, business class really matches the needs of the aspirational Indians flying business class.
I mean, you're here in Tokyo, India to Japan?
Well, we will start soon some collaboration with Japan Airlines, connecting on our domestic network. We have some other businesses which we look at. So, indeed, we're expanding.
What businesses?
We're expanding on different parts.
What sort of businesses?
Well, we recently announced IndiGo Ventures Fund, so we start to work with some startups. We really look in changing from a very India-centric airline to India will be the very basis to a more global aspirational airline.
Peter, I did want to ask you a follow-up to what we were talking about earlier. Do you have more plans when it comes to China at the moment? What's the latest?
Well, at this point in time, we're not having any more plans for China. Of course, we keep a close eye on what's happening in terms of a potential opening of the market. But at this point in time, we're not having any other plans. We've launched our flights to Hong Kong, but we review closely and we keep a close eye on what's happening on the potential opening of those markets.
So long term, what are your biggest growth markets as you see it?
Again, looking at the geographical position of India, Australia, Asia, Europe, that's all within 9 hours of reach between pretty much the different points in India. So we're not having a very specific focus whether it should be Asia, or should be Australia, or should be Europe, but really that geographical position of India helps us to become a global airline.
Any specific conversations on China that you're having?
Well, not other than the one I just alluded to.
When it comes to business potential in the future, here in Japan, what are you seeing in terms of that direct flight potential?
Well, there's a lot of investments being made also by Japanese companies in India, and clearly the situation of India today is very different than the situation of 5 or leave alone 10 years ago. So a lot of foreign investments are being made. A lot of companies are seeking for collaboration. India has really embarked on a growth trajectory. It's foreseen to be the world's third largest economy by 27, 28 timeframe. So against that backdrop, we will see a continuous rise of not only leisure and tourism and friends and family, but also very much business traffic.
You already have a loyal following base, right? You have frequent flyer program over the summer called Blue Chip, which you recently launched. What are the aspirations for that? Well, that's very exciting, actually. You know, last year we welcomed 100 million customers in just a single year on board. Last quarter alone, we had 28 million customers on that quarter. And we see a very changing trend with a lot of customers flying with us, a lot in domestic and then international also. So the launch of our loyalty program is really well timed. So it has gone live now, actually. As we speak, it's gone live in this quarter, and it has been a resounding response from the market. A lot of people really have signed up for that loyalty program. And again, if you do 100 million customers a year in a market growing as the Indian market, it makes every sense to start building on a loyalty program.
I do wonder whether the ongoing supply chain issues globally, does that cause you to sort of dial back those ambitions at all, or your forecasts at all going into the next few years? And also, I guess the second part of that is perhaps joining an alliance. Does that maybe help you broaden your network and your access to markets during the period where we are seeing these challenges?
Yeah. Well, on the supply chain side, again, I think what IndiGo has done extremely well is dealing with these supply chain challenges and yet keeping our capacity guidance. We've done that in last fiscal year and also we've done that in this fiscal year. And we've done that by a whole range of different measures. We have extended some leases. We reintroduced some aircraft. We have some temporarily damp leases. We have different collaborations. So we have a whole range of measures. So our capacity guidance for this year, we're very confident it will be met again. Now that we have turned the corner and we see the actual numbers going down, we can be even more confident of maintaining that capacity guidance. And at IndiGo, we're to some extent in a unique position because we've placed a lot of plane orders well before others were doing that. So this steady supply and steady entrance of new aircraft, one every week, think about that. Every Monday I drive to the office, new plane coming in this week, new plane coming in that week. So with that, we're able to double towards the end of the decade. Your question on the alliance, I think we would be very much focused on having bilateral partnerships, and we're actually having a couple of them for a long time, and a few recent ones expanding. For the time being, we keep building on that.
Peter Albers, good to have you with us while he's stopping by here in Tokyo. He's the CEO at IndiGo. And of course, if you missed any part of this conversation, TV Go is your function. You can also watch us live, and you can dive into any of the securities or functions that we talk about, be part of the conversation, and send us instant messages as well. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg.
Take a look at what we're watching when it comes to cryptocurrencies, and Bitcoin hitting $70,000 for the first time since June as we get ever closer to the US election. This major token, of course, viewed by some as a so-called Trump trade. We saw US spot Bitcoin ETFs attracting some $3.1 billion in the month of October, really bolstered by the inflows when it comes to dedicated ETFs, as well as the speculations, of course, as to that political outcome there. We're seeing smaller tokens, Ether, the second-ranked token, also posting some more modest gains there as well. But of course, so much of this comes down to the Republican presidential nominee Donald Trump embracing digital assets during his campaign. He is ahead at the moment when it comes to prediction markets, while polls show that neck-and-neck race against Kamala Harris. Then overnight, we saw that rally in stocks, and Tony Sycamore from IG saying it continues to price in a Trump victory. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens. After some gains on equity markets on Wall Street, and of course, Haidi, this as we're seeing the busiest week for earnings season there. Here in Asia, we continue to watch the Japanese yen.
This as we get ever closer to the US election, right? And before that, really a slew of Fed, relevant eco data from the US that will continue to kind of shape expectations from the central bank. But it does look like, whichever economy you're looking at the moment, politics is front and center today.
Yeah, here in Japan, we have continued to watch that political instability after the parliamentary elections led to the ruling coalition actually losing its majority for the first time since 2009. And the Japanese yen took a hit. We are continuing to be on yen watch ahead of course, the BOJ policy decision on Thursday as well. No change expected there, but we continue to watch the weakness against the U.S. dollar. We're holding at that 153 level at the moment. The yen has given up all of its gains since the July rate hike by the BOJ. The Nikkei now down 0.2% after some gains in the previous session. There's a lot of speculation that perhaps, given the political instability, we might see more populist measures, especially when it comes to fiscal spending. We also got the jobs data here in Japan, and we saw the labor market tightening for the month of September. The jobless rate falling to 2.4%. Take a look at how South Korea is setting up. We had some gains for the Korean stock markets, but the Korean won has also been under a lot of pressure. We're talking about lows against the U.S. dollar that we haven't seen in about 3 months. A little bit more strength in today's session, but it's really the case for broader Asian currencies. The Bloomberg gauge of Asian FX now trading at the lowest level since August. Haidi.
Yeah, we'll continue to watch those movements, particularly as we get closer to the election, what the implications are for the US dollar and the yen. But take a look at another currency you're watching when it comes to the Kiwi and Aussie. We're looking at that potentially testing this year's high, that rate divergence picture between the RBA and the RBNZ, and their outlooks particularly really continuing to weigh. But this is a picture across equities trading as we're just an hour into the session here in Sydney, here in Hong Kong, I should say. But 0.4% high is how we're tracking with seeing that leadership by real estate stocks in Australia, consumer shares as well, showing a bit of a spark when it comes to those discretionary names. The Aussie dollar is largely unchanged, and we are watching the bond markets, particularly when it comes to treasuries, and the moves that we saw overnight resuming the ascent when it comes to treasury yields, that weak demand and a pair of auctions that was disappointing, really suggesting that investors continue to have that anxiety about supply as well as the Fed outlook. Let's get to our next guest, who advises investors to lock in attractive US bond yields. Daniel Lamb is the head of equity strategy at Standard Chartered Wealth Solutions. So, Daniel, do you see yields going much higher from there? Because it feels like there is still, you know, as I said, that sort of investor anxiety given the level of uncertainty at the moment.
Well, we do believe that around the current level, it is quite attractive for the medium to longer term investors, because the 10-year yield has gone up by roughly 60 basis points over the last 5 weeks or so. And we believe that is pricing in a Donald Trump or Republican clean sweep, right? And other trades that include such phenomena includes perhaps the small caps and also the US financials, okay? So all these are pricing in that scenario almost to perfection. So basically, for the longer-term investors, because of the Fed rate cut path is still very much intact in our view, that we believe the yields would gradually come down after the elections.
What I suppose is interesting is almost regardless of who emerges victorious from the election, neither candidate is really prioritising deficit reduction, right? Mm-hmm. So does that play into, you know, this sort of uncertainty and the anxiety that we're feeling across bond investors?
Yes, that certainly does. But we do believe that they would need to be stimulating the economy first, right, before they... I mean, the deficit has been increasing for a long time, right? So it is a case of, you know, in a way, trying to stabilize the current economic scenario before getting concerned about the medium to longer term issues. So that is likely to be the policy that they'll be taking. So that means, at the same time, gold is, you know, our only overweight in terms of our level one asset class allocation. And that really plays into that scenario. We believe that under all the different scenarios, gold would be performing pretty well, right? Regardless of who wins. Because of what you said, the budget deficit, geopolitical tension, etc. Yeah. Yes.
Daniel, what about the Japanese yen? I mean, with U.S. yields rising, we continue to see it pressured.
Oh, the yen is because of the, you know, current political uncertainties that we're seeing. So that is probably going to be, you know, wobbly for a while, especially when you're going into the U.S. elections, right? Because going into the elections, you expect that the dollar would remain quite strong. Okay, so two sides of the equation: dollar staying strong and political uncertainties in Japan. So dollar yen probably going to be going higher to around the 155 level, roughly, right, before it can go back. BOJ is on a different path from the Fed. It's on a rate hiking path. And the fact that, you know, the election results is as is means that the people, you know, are concerned about the inflationary scenario. The laymen, in terms of the economy, they are concerned. So the BOJ is likely to be hiking. And that would help to narrow the interest rate differential between dollar and the yen, and dollar yen to gradually come back down.
So what do you make then of what happens to U.S. tech? Because I know that you've been watching that inverse correlation with the yen.
Yes. So basically, we have cited the dollar yen unwind of the yen carry trade as the major risk for U.S. growth stocks or tech stocks. Because if you look at the movement of the two since 2022, they have been basically very much, you know, correlated, right? Perfect correlation. So the money that people use to short yen, the money that they get is one of that's used to buy these high-flying U.S. growth stocks. So if there were to be a sharp unwind like what we saw back in August, that can hurt the tech stocks, cause a temporary dislocation, so to speak. So given the long-term prospects for those stocks, if there were to be such a scenario, that would be a great buying opportunity for those.
Tech giants reporting this week. What are your expectations for this earnings season?
Well, this earnings season, we believe, is likely to be pretty good. I mean, so far the companies have been doing quite well, so we're expecting that the guidance to be quite good as well for those. But of course, in terms of the AI or the tech stocks, semiconductor stocks, those that are more advanced in terms of for the advanced technology, those are likely to be doing better than those that are using less advanced technology in terms of the semiconductors. So there is likely to be differentiation there, but we do believe that such causes like dollar yen coming off, leading to the tech stocks to be under pressure potentially. Those are factors that people should be taking advantage of for the longer term investors.
Daniel, after the exuberance over the China stimulus package, we're now seeing some of those ETFs seeing some significant money being yanked out now. In fact, when it comes to large caps, one ETF seeing the biggest outflows from China since 2020. You talk a little bit about the sort of temporary reallocation from Indian funding, right? Does that mean when you look at China versus India, you're still preferring the latter while you kind of wait for more details on what happens with China stimulus?
Yes, because the latter is more of a growth, longer-term, consistent growth story. In China, we're not so sure, right? Because it depends on what is going to come out, further details of the stimulus package. People are waiting for that. That's why people are pulling money out, and money rotates very fast. They go to the U.S. for the Donald Trump trade, for example. So yes, we're preferring India for the longer term. But if the stimulus in China were to come out to surprise on the upside, then we can see another exuberance in China, right?
Daniel, really great to have you with us. Daniel Lam, who's the head of equity strategy at Standard Chartered Wealth Solutions. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to chip stocks trading across Japan and Korea for the first sort of 11 minutes. Really soundly lower there, about 0.7%. We're seeing this when it comes to Samsung, steeper losses there for Tokyo Electron. We are also headed into some numbers expected after market hours from ASM International there as well. Those TSMC orders will be in focus. But of course, so much of this is really down to geopolitics and the political implications of President Biden finalizing these curbs on US investments across China, chips and AI tech access. Let's stay on these rules. Our tech reporter Annabelle Jewellers brings us in, and of course, we're sort of counting down to the final days before the election, but a lot is being pushed through right now.
Yeah, that's right, and I think really, regardless of who enters the White House in January, that hawkish on China and that focus on advanced technologies is not going away. So what we have today is essentially following up on an executive order that was signed by President Biden last year, and it's called the final rule, which essentially spells out the restrictions in greater detail and also gives greater context on why they're being put in place. So the three sectors that are being covered here, there's chips and microelectronics, there's quantum technology, and then there's AI as well. And so now what happens is that the US citizens, or US people as they're named in the White House statement, are going to be banned from some investments into those industries, those three industries, or otherwise they're going to be required to notify the US government. So it's really an extension, because we already have a lot of trade restrictions that are in place, banning exports of certain advanced semiconductor manufacturing technology, for instance, to China. Now it's about putting restrictions around the investments into companies in China as well.
In terms of when they take place, what do we know?
So the new rules start effect January 2. They really are just sort of building on that framework that was actually, or the blueprint that was announced in June of this year. But to give a greater clarity or greater context around this, it would be, for instance, the restrictions around advanced semiconductor manufacturing technology or advanced chip technology. That sort of investment by a US person would be banned by these new US rules. If you're talking about legacy chips, that's older technology, then a US person might just have to notify the US government in that case. When you're talking about AI, for instance, because the rules are quite explicit explicitly spelled out here. It's whether how the quantum computing power is going to be used to train the AI tool, and then also about how that AI tool will be applied in turn. So lots of different restrictions here, but really the focus is on essentially stopping China from using US technology to modernize its military. That's really the greatest concern from the US, is that its best technology gets used against it in the end.
Annabelle Druller's there with the latest on tech. Thanks for that. And take a look at how we're trading in the European future session right now. We're seeing a little bit of upside after gains in the previous session, easing tensions in the Middle East, and really Israel avoiding some of Iran's oil facilities has led to that boost, especially with airline shares being supported given the fall in oil prices. Although overall we are seeing European stocks perhaps seeing a loss for the month of October, given that we do have other risk factors such as the UK budget coming up, not to mention the US presidential elections, of course. The euro also a little bit of upside right now, especially after 4 weeks of losses, Heidi.
Volkswagen, we're watching very closely, Shery. They're planning to close at least 3 factories, eliminate thousands of jobs and slash wages. The EU's biggest automaker really accelerating the cost-cutting plan. Our transport reporter Danny Lee joins us now. So I guess characterise the scale of this crisis and does the latest move serve to have a meaningful impact in the right direction?
I think the unions said it best, right? They say this is a weakening starvation in instalments, so it's very loaded language. But these are plans which obviously have not gone down well with unions at all, because this is such a historic move for someone like Volkswagen, trying to save the brand but also save Europe's biggest automaker. They've never cut jobs before, so this is something that would be politically contentious and clearly fought all the way to the very end, I'm sure. But this is something that if they can try and turn it around, because they are facing weakening demand at home and competition in one of its biggest markets like China, that it has to do something to arrest what we just saw was its second profit warning in a couple of months. So they really are struggling, and with high costs, they've got to eliminate costs somehow, and this is the hard truth of tackling labour.
The language is really interesting, and it no doubt will feed into kind of the core anxiety over this key industry, particularly in the political landscape that has changed so much. You mentioned China. How much of it does have to do with that sort of ongoing tug of war?
I think for China, at least in the business sense, rather than, say, geopolitics, what we are seeing is VW stumbling with its transition to electric vehicles. So it has spent many, many billions in trying to get its transition right, and it's been failing, and it's been pulling back from that. And then also, it cannot compete effectively against Chinese EV makers in particular, and so therefore it has struggled. It is actually looking to partner with Chinese EV makers as a result, but the cost of which it has got to over a multi-year period means it has left itself lagging behind many of its many smaller competitors.
So what we're seeing at Volkswagen right now, is this then emblematic of the wider industry?
I think the struggles of Volkswagen, and actually what we see across a number of German automakers and French automakers in particular, there's a lot of struggle out there, particularly in Europe, given that they're all facing this same kind of weakening demand. And the fact that when they used to rely on somewhere like China for reliable revenue and profitability, that is now not the case. And with this recent tug of war with Europe and China over tariffs, clearly this trying to slow down these Chinese EV makers arriving on Europe's shores is one way to try and slow things down. But when you are trying to fix the fundamentals, clearly for someone like Volkswagen, it kind of shows just what potentially the rest of the European auto landscape has to do next.
Transport reporter Danny Lee there. And in fact, we're seeing pressure for another automaker as well. Ford saying that full-year earnings will fall to about $10 billion at the low end of its forecast due to struggles cutting costs and overcoming supply disruptions caused in part by recent hurricanes. Shares tumbled in U.S. after-hours trading. Ford is contending with persistent high costs and an overhaul of its EV strategy amid slowing demand. CEO Jim Farley says the EV unit is the main drag on the whole company. Starbucks is telling its corporate staff they could be fired if they didn't work in the office 3 days a week. A memo seen by Bloomberg shows the coffee chain is implementing a standardized process from January to hold workers accountable. The move comes less than 2 months after Brian Niccol took over as CEO. Apple has started rolling out its first set of Apple Intelligence features and introduced a new iMac desktop with an AI-focused processor. The company is calling this a new era for its devices. Apple Intelligence software is now available for the iPhone, iPad, and Mac. Although Apple previewed a broader set of AI capabilities in June, some of the most anticipated features, including the ChatGPT integration, are not arriving until December, Haidi.
Well, Shery, OpenAI CFO Sarah Friar says financial services are increasingly turning to AI as they look for ways to boost efficiency and drive revenue. She spoke exclusively to Bloomberg's Ed Ludlow at the Money 2020 conference in Las Vegas about AI's impact on banking.
AI is happening right now. It's not experimental. It's not something that people are just playing around with. Banks, financial institutions, fintechs, people are using it today in their business.
Well, there's the Morgan Stanley case study.
Yeah.
You know, this week alone or past week, Bank of America has talked about how many patents it's got in machine learning and artificial intelligence. But do you actually have a tangible sense of what it is those financial institutions are doing with your large language models?
Yes, absolutely. So Morgan Stanley is a great example. In their wealth management business, they're using our models both to help wealth advisors be more productive. They're using it as a way to create better financial advice and outcomes for customers. We're seeing folks like Klarna use it in customer service. The CEO of Klarna has been very loud and proud on this front. That's another great case study in terms of productivity improvements. And then we have banks like BBVA that are using it all across their business. And that's really our message here. It's just get started. Get enterprise ChatGPT rolled out to your organization. See what your people do with it. Help them just get started, whether they're in marketing, in finance, in product. Everyone can have really interesting use cases.
Even if we are just getting started, can you help our audience understand how meaningful a contribution the financial services sector, fintech, makes to OpenAI's revenue?
Yeah, so today if you look at our largest verticals, areas like EDU, education, healthcare, but financials is probably third. And again, I think that's because they are typically early adopters. They're often willing to take that risk because they see the upside in terms of driving more revenue, but they also are very good at managing their cost and efficiency. And it's great when you get an early adopter like Morgan Stanley because it tends to lead the way. I can't think of a wealth management client today that's not coming to us to say, what do we need to do? How do we get started?
OpenAI CFO Sarah Friar speaking to Bloomberg's Ed Ludlow there in Las Vegas. We have more ahead on the Asia trade. This is Bloomberg. We have breaking news. Take a look at how Nippon Paint is trading at the moment. We are seeing a jump by the most in more than 40 years for this company. At one point, surpassing 20% gains in today's trading session. This after announcing plans to purchase global chemicals formulator AOC for $2.3 billion. So Nippon Paint will be buying all of the equity interest of AOC's parent company and its subsidiaries from Lone Star Fund, according to a statement on Monday. And we're now seeing the shares rally more than 16% at the moment. The best day for the company in more than 40 years, Haidi.
Shery, we continue to, of course, watch the frenetic pace of campaigning and events that are really stacking up as we head closer to the U.S. election. And at the moment, we are seeing the former President Barack Obama appearing alongside singer Bruce Springsteen as well at this event in Philadelphia at the When We Vote, We Win concert. We're seeing the Vice President Kamala Harris in the meantime campaigning in Michigan. The former President Trump is in Georgia, where he's attending events there. A rally in Georgia Tech is is on the schedule as well. And of course, both VP nominees, Walz and JD Vance, will be in Wisconsin, one of the critical battleground states, as we get closer to the key vote. And as we do that, we have quite a sort of interesting results when it comes to the latest MLive poll survey, right? Basically, it seems like regardless of who the victor is, Harris or Trump, American wealth is set to grow either way. A Trump presidency is seen as being more beneficial for stock and Bitcoin investors. We've seen that Trump trade play out when it comes to the levels that we're seeing in Bitcoin at the moment. A Harris presidency, Shery, could bring more relief when it comes to housing costs.
Yeah, whether or not these gains are actually sustainable is a key question, right? When it comes to really presidential elections, they tend to have limited impact, if any, when it comes to the markets, especially when it comes to longer term. But you said it, we have already seen the Trump trades play out in the overnight session. For example, we saw Bitcoin rallying, Trump media rallying. But whether or not this is sustained and what happens after the elections on November 5th is going to be a big question going forward, especially if we see more geopolitical tensions, right, depending on who becomes elected president. We continue to watch geopolitics, and these are the top stories right now. Israel readying a new laser defense system that can intercept rockets, drones, and mortars. The shield, known as Iron Beam, is expected to be operational next year. The announcement comes as Iran says it will respond to last weekend's Israeli strikes on its missile systems. For security reasons, the Israeli cabinet has moved its regular meeting to an undisclosed location. Israel's parliament has passed a bill to restrict the main UN organization supporting Palestinians. The bill bans the UN Relief and Works Agency's activities within Israel's territories. While this technically doesn't include Gaza and the West Bank, the agency would be impacted in its daily operations, and the move further threatens the already slow flow of humanitarian aid to Gaza. We have more ahead on the Asia trade. This is Bloomberg.
Investors yanked money out of exchange-traded funds that buy Chinese stocks last week, halting a streak of inflows as the latest stimulus measures failed to impress investors. Our China correspondent, Min Bin Lo, joins us now in Hong Kong. Of course, so much focus remains on what we get out of fiscal announcements. And we were talking to Daniel Lam a little bit earlier, and he's saying perhaps we are seeing kind of that re-rotation back into markets where that funds came from, which is like India.
Yes, so we're seeing quite a stunning reversal. If you look at those US-listed emerging market ETFs, we saw outflows last week of more than $590 million. That's compared to the previous week where we saw gains of more than $460 million. And if you look at the screen, that shows the iShares China Large Cap ETF seeing its largest weekly withdrawal since May of 2020. So that suggests that some of that investors' optimism on China is starting to fizzle out because of the gradual easing measures we have seen that is largely seen as being, missing the mark here, not providing enough consumption targeted support. But of course, we have the legislature meeting November 4th to 8th. The Chinese vice finance minister has promised, or rather has hinted, that the fiscal move is going to be quite large. So all eyes will be on that. If it is targeted in the right direction, it could go quite a long way to shore up investors and household confidence.
Is really trying to boost electric vehicle purchases part of that effort to support the economy? This, according to local media.
Yeah, so state media has been reporting that the central government is asking local government departments to buy these new energy vehicles in an effort to support that sector. And there you go on the screens. You can see already some of these EV stocks listed in the U.S. Going up on the back of this news. And this comes after Beijing had urged its EV exporters to halt any expansion plans in the EU while negotiations are still ongoing on those tariffs tariffs up to 45% on certain brands that could kick in November. And this comes after Beijing also asked its exporters not to negotiate one-on-one with the EU because China wants all these negotiations to be under one umbrella package led by a Chinese industry representative. And so far, both sides, EU and China, are looking to come up with a sort of complex mechanism for price and volume controls. Not sure yet if there will be any breakthroughs before the deadline tomorrow when those regulations will have to be put in place. So that's something to watch very closely.
China correspondent Min Lo there. Now, GE Aerospace CEO Larry Culp says it would be foolish to bet against Chinese plane maker Comac. That's after China's big three airlines ordered some 300 jets from the company. Culp also told us exclusively about his outlook for the global aerospace industry.
Given how strong demand is and the progress we and others, our suppliers, our airframer customers are making, we'll continue to drive output. Again, because the demand is so strong, we'll talk about the supply chain, but I don't think this will be a lost decade. I think this will be a very important decade as the industry recovers from the pandemic, modernizes fleets, expands fleets with more fuel-efficient aircraft.
I'd like to touch on China. It has big ambitions, Comac C919. So far, we've seen orders of about 300 coming from the big Chinese carriers. What do you make of that number?
Well, it would suggest that the Chinese carriers like that airplane. We'd like to think one reason they like that airplane is because we have our LEAP 1C engine under wing, sole source in that regard. And I think Comac and the Chinese are quite serious about their intentions with that airplane. And that demand that you just cited really is the beginning of the market acceptance of that aircraft.
Do you think it can be a game changer? Do you think it will reshape the landscape in the aerospace business?
Well, I think that we will see over time how successful Comac and the market acceptance of that airplane is, but it would be very foolish, I think, to bet against Comac and their customers.
What are its biggest challenges?
Well, I think any time that you bring a new aircraft to market in a marketplace as complex as ours, again, as we were talking earlier, there is not only the ramping of the supply chain to produce more of those airplanes every year, but the regional and ultimately the global support network that those airplanes will require. That's a serious undertaking. I think Comac understands that clearly and will do everything they can to master that challenge.
GE Aerospace CEO Larry Culp speaking to us for Insight with Haslinda Amin. Join Haslinda for that interview in full at 11 a.m. Singapore time, today 11 p.m. in New York. Take a look at how early trading is getting underway across Asia. We are seeing the Nikkei holding steady, but when it comes to the topics, we're seeing gains in financials and utilities companies leading those gains, although consumer discretionary stocks are under pressure. When it comes to the ASX 200, a similar picture. Tech is one of the big gainers in that market. And you can see the ASX 200 also up 0.4% at the moment, although the Kospi is reversing some of those earlier gains that we saw this week. We continue to watch the Korean won because we have seen a lot of warnings coming from Korean authorities about the weakness of the won as it's holding at around that 3-month low against the US dollar. Take a look at how Chinese earnings have been coming along as we head towards the China market opens. 36% of companies on the MSCI China Index have already reported, and we're seeing more negative surprises than positive. 69% have been surprises to the downside. Positive surprises 27%. It's still early in the earnings season, Haidi, but of course we know very well about the challenges that the Chinese economy faces.
Yeah, and of course, HSBC sort of embodies that in one sense, right? With the third quarter earnings results due out on Tuesday. The latest restructuring expected to be the focus of the report. This earnings announcement will be the first as well under the new CEO, Georges Eldery. Our Bloomberg Intelligence Senior Analyst, Francis Chan, joins us now. So in the third quarter results call, we obviously had the spotlight on the organisational revamp. What's your view as to what potential cost savings we could already see?
Yeah, of course, there haven't been too many details released, and we don't expect much today. According to Bloomberg Intelligence Analysis, cost savings just by combining the investment banking, commercial banking divisions can come up to more than $500 million spreading across 2025 and 2026. That's an early estimate of ours. Cost-cutting efforts would be pretty critical for HSBC to contain this cost efficiency ratio. According to consensus, group costs may still grow at a pace of 3% a year through 2026, but revenue may not do very well because of the Federal Reserve rate cuts up and coming through the end of next year. So we are looking forward to more to at least contain the cost efficiency ratio at about 50%. That is what it was achieved in 2023.
We also see that bigger separation when it comes to the business units. Does that have an impact meaningfully when it comes to core competencies?
Yeah, HSBC has advertised itself as the world's local bank, and its ruthless integration within the organization, different units within the company is pretty critical to offer services to its global customers. But after this kind of very distinctive separations, maybe a customer in Hong Kong or a customer in Southeast Asia may wonder how they may still conduct their overseas business in Europe or North America. That will be something the market will still need to wait and see whether its core competence will be affected. But obviously, some shareholders like Ping An Insurance, which has been advocating a better separation of business, Asia versus others, would be a happy party to see this revamp.
How much of these challenges will be reflected in the earnings? We have Chinese banks also due to report third quarter results.
HSBC will have a different set of earnings headwinds, mostly amid the headwinds from Federal Reserve's rate cuts, although now the rate prospects is a bit uncertain with the upcoming U.S. election on the 5th of November. But the Chinese banks, very likely, they will have a very different path as the PBOC will really ask them to sacrifice more of their profits to help out the economy. Margins, loan growth will be all the focus for the Chinese banks to be reporting in the coming 48 hours.
Bloomberg Intelligence Senior Analyst Francis Chan there. And you can also turn to Bloomberg for more on these earnings from HSBC. That's at TLIVGO to get that commentary and analysis from our team of expert editors. Coming up next, we'll be discussing what Australia's relationship with the US and China may look like under a Trump or Harris presidency, while Canberra continues to rebuild those ties with Beijing. This is Bloomberg. Regardless of who's elected the next president of the United States, Australia will face a balancing act in maintaining the interests of both its most important strategic ally and its biggest trading partner, of course. That's China. Bloomberg's Paul Allen takes a closer look.
This month, there was bad news for Australian lobsters. They're back on the menu in China after a 4-year trade ban, reviving what had been a $460 million export market. The live lobster ban was the last remaining trade strike China had imposed on Australia after the former Morrison government called for a global investigation into the origins of COVID.
We'll pick up the live lobster from where we left off, but certainly keep our mind on the other markets and particularly the local market. I don't think China will be the same market as what it was when we left off.
It's wise to be cautious. Australia's lobsters and other exports are a potential target should relations sour again, and it's easy to identify potential flashpoints, particularly when Australia's biggest trade partner is a popular punching bag for its biggest ally as the US election campaign draws to a close.
I will make sure that America, not China, wins the competition for the 21st century.
I want to cut taxes on Americans while putting tariffs on China and foreign countries.
While the prospect of a Harris presidency means more predictability around trade, the impact of Trump tariffs could mean upheaval. The good news for Australia is that it runs a trade deficit with the United States, making it an unlikely target. Former Australian ambassador to the US, Joe Hockey, dealt with and golfed with Trump during his administration. He's seen the Trump tariff movie before.
What worked with Trump, as I said, under our trading relationship, you win. You've got a big trade surplus with us. And they throw, oh, but you've got a big trade surplus with China. I go, isn't that great? Someone's getting stuff out of China. We're on your side. And they, oh, okay, yeah, maybe that works. You know, so because it ends up going back to the US because we've got a trade deficit with the US.
In either a Trump or a Harris administration, defence looms as another flashpoint. As a US ally and member of the Quad, Australia's stance in the contested South China Sea is a sore point for China.
Though not directly involved in the South China Sea issue, the United States, Japan, India, and Australia are resorting to microphone diplomacy to criticize and smear China, stirring up troubles and misleading the public.
China is also an opponent of the AUKUS alliance, which would see US nuclear submarine technology transferred to Australia. AUKUS was a Biden project, likely to continue under Harris, and experts see it surviving under Trump as well.
I think Trump will look on AUKUS as a business deal. I think he wants it scrubbed, and he says, oh, this is a really big project. Where's the money going? Where's the contracts going? Where are the jobs going? Does this serve America first? Now, I think he'll come out on the other side as seeing it as an okay agreement.
There is one certainty Australia can rely on after the dust settles on the US election. The diplomatic balancing act will remain as delicate as ever. Paul Allen, Bloomberg, Sydney.
A Lowy Institute poll has found that 73% of Australians would prefer Kamala Harris become the next US president, 22% of respondents preferring Donald Trump. Let's get some more perspective with Michael Fullilove, who's an executive director at the Lowy Institute. And it's quite an interesting survey, and there is some skewing on those responses depending on whether you're talking to, I guess, you know, Labor and Green voters and those that identify as coalition voters. But is this on the basis that there is a belief that Kamala Harris would be able to better handle aspects of this election that are pertinent to Australia, namely China and regional security?
I think, I mean, you never know how respondents to a poll, what's going through the minds of respondents to a poll, but I would suggest that Mr. Trump's instincts run counter to Australians' instincts on all the big issues. For example, he is hostile, as we've just heard, to free trade. Australia is a trading nation. He is a bit of an isolationist. Australians are internationalist. We are a proud US ally. He believes that allies are scroungers and freeloaders. So I think it's less of a judgment probably on Harris because, to be honest, even if you talk to insiders in the White House, it's not exactly clear what Harris's worldview is, but it's more, I think, probably a reflection on the fact that Australians' attitudes to the world, as demonstrated over many, many polls, are quite different from Mr. Trump's.
The polls are pretty sort of neck and neck at the moment, depending on what you look at. What is the concern, though, if we see a Trump 2.0 presidency? Because we know that for Canberra, it was pretty difficult balancing these two strategic interests, and a lot of that came out, you know, as a result of worsened relations with Beijing.
Well, look, I think every ally in the world, including Australia, will have to work out if Mr. Trump returns to the White House, what is the best way to manage it. We saw last time that being an outspoken critic of Mr. Trump, as Ms. Merkel was, is not helpful, probably not wise. On the other hand, throwing your whole lot in with him is also probably not good for the soul. And so I think what Australia would have to do is be a pragmatist, be in the centre. Shinzo Abe, I think, last time was pretty effective at this. Show a lot of respect to Mr. Trump, treat him in a courteous way, but at the same time maintain your dignity. You know, work on him behind closed doors rather than through megaphone diplomacy. It's that sort of style. Then you come down to the personalities, the personal connection between the leaders. If it's Mr. Albanese and in Canberra and Mr. Trump in Washington, well, it's hard to think of two individuals who are more different than Mr. Albanese and Mr. Trump in terms of their origins, their values, their careers, their worldviews. If it's Kamala Harris and Mr. Albanese, that's a much easier relationship to navigate. But whoever's there, as you say, the United States is changing. China is leaning forward. So Australia does need to maintain this strong alliance with the United States, which 7 or 8 out of 10 Australians think is really important to our security, but at the same time maintain respectable, stable relations with China.
Michael, we saw groupings like the Quad, AUKUS really flourish during the Biden administration. Are these groupings threatened depending on who wins?
It's a good question. I think, look, I think probably they're okay, because as your story indicated, there's a bipartisan concern about China in Washington. And so the Quad grouping and the AUKUS deal with Australia, I think, would take strength from that. On AUKUS, I'm pretty sure that Harris would continue with AUKUS because, of course, AUKUS is one of the signature achievements of which the Biden administration, of which she was part, is proudest. So I can't see her walking away from it. Trump is a slightly different matter. He hasn't said much publicly on it. I asked J.D. Vance, Mr. Trump's running mate, at the Munich Security Conference in February about AUKUS, and he said he's a fan of AUKUS. But you could imagine Mr. Trump, who has a record actually of relitigating deals that his predecessors have made. You could certainly imagine him saying, well, have we maximised the return for the United States out of AUKUS? Do we need to reopen it? I'd say that is a risk that Canberra needs to factor into their calculations.
And of course, these groupings really have been formed in order to push back against a more assertive Beijing as well. Do you expect Beijing's behavior to change on the global stage depending on who gets elected on November 5th?
I'm sure they will adjust because the United States is still the most powerful swing factor. It's the most powerful global actor, the only country with a truly global foreign policy. But China is also on its own path. And so how the United States reacts to China's assertiveness is important. What emphasis does Kamala Harris put on checking China? We don't know really too much about her instincts. On Mr. Trump, it's an interesting question. I mean, I think in many ways his instincts would take him in the direction of doing a deal with China, potentially. I mean, he likes strong men. He likes authoritarian leaders. He's big on trade. So I actually think there's some opportunities for China if they play their cards right, if Mr. Trump is elected. He is not an ally. He's not an ally-focused person. As you say, it's Biden who's put the emphasis on the Quad and AUKUS. There is a pathway there for Xi Jinping to manipulate Mr. Trump if they're clever.
So it sounds like perhaps in that situation you would see, of course, a lot more focus when it comes to these key strategic bilateral relationships. When it comes to leader-to-leader relationships, how does Australia fare at the moment? Obviously, we do have an election due by next year, but we do know that, Prime Minister Albanese and President Biden have had a good working relationship.
Well, I mentioned before that if Mr. Albanese is returned at the next election, then I think it would be a much more natural and easier relationship with Kamala Harris than it would with Donald Trump. What if Mr. Dutton, the Conservative opposition leader, would have become Prime Minister next year? Well, I think with Mr. Trump, it would be a much more natural relationship. But having said that, Mr. Trump's relationships are very transactional. And last time, you remember, he had difficult relationships even with some conservative leaders like Benjamin Netanyahu in Israel and Theresa May in the UK. Unless you get the chemistry right and unless you're prepared to be very nice to Mr. Trump, it can be complicated. What if, on the other hand, if the Rubik's Cube comes out the other way and you have Mr. Dutton in power in Canberra and Kamala Harris, Well, on the one hand, they're very different people. She's a California liberal. He's a right-wing conservative. But on the other hand, Mr. Dutton's instinctive pro-American attitude would probably mean that any US president would probably like the cut of his jib.
Right. Marco, always great to chat with you. Marco Fullilove, Executive Director at the Lowy Institute. We do have more on Australia Ahead every Tuesday at 10:40 a.m. if you're watching in Sydney, 7:40 a.m. in Hong Kong. This is Bloomberg.
This is the setup as we head towards the China market opens. A50 futures closed higher, 0.4%. We are watching those EV stocks. We heard from local media that the China central government wants to boost electric vehicle purchases. That's it from the Asia Trade. Our markets coverage continues. The China show is next. This is Bloomberg.